Good morning. We are going to present to you on foreign knife stock modeling, and I am Prince Osu Ansa.
I'm Zhenya. Also,
Also, our sponsor is Jose Carlos. He has been supportive in this project so far. For today, our content is going to be the motivation and goal, the end-to-end pipeline of our project, the data sourcing, feature engineering and labeling, the core models that we have, back testing, and also result and outlook. I believe each one of us would want to catch a football, but none of us would want to catch a falling knife. What then is a falling knife? It is a sharp downward price movement that traders will often want to catch reversals out of it, but then catching them early sometimes may lead to huge losses. That is why we've put together a multi-stage machine learning model to predict signals for reversals. And these are going to be true signals and not just normal noise. So the motivation is to generate automated trading signals with the objective of predicting and also maximizing profitability. The multi-stage machine learning model begins with the signal generation, which is our base model. Then we have our conformal prediction to confirm if the signal that has been predicted is truly the right signal. Then we have the last model, which is our meta labeling to confirm that indeed there is a probability of you getting something out of it when you trade it, and it helps in also sizing your position. So the machine learning model is going to produce a high confidence trading signal and dynamically going to help you to size your position and also improve your performance. So the end-to-end pipeline is going to be resourcing our market data, we do our pre-processing, we do the actual modeling, then we have the back testing. So for our data, we use a 1 hour data of Alpha stock from 2013 to 2025. And for our features, in order for our model to have the multi-dimensional market signals, we use both technical indicators and time series statistical indicators. So for the labeling, we wouldn't want to predict just the price of the stock, but then we would want to predict the signal. So we define a label whereby -1 represents a valley and +1 represents a peak and 0 represents in between the peaks and the valley. These signals are not only serving as a normal signal, but they are also helping you show a trading signal as to when to buy and when to sell. Xenia will take us through each of the models and what we've achieved so far.
thank you, Prince. So after the data preprocessing, we will get the label and features. So let me introduce you how we use the labels and features to generate trading signals. We will use a multi-stage model, as you can see here. First, we will do the feature selection. We select important features for the machine learning prediction, and then use that features as the input features to the base model part. Actually, the base model it is a classification model. It predicts the label. So actually, we can get the trading signal from this part. But in order to increase the prediction accuracy, we add an additional component like the conformal prediction. It helps us to filtering out low confidence predictions. And then a second filtering model, it reduces the wrong prediction, which will lead to false trade. And the last model is meta model. It is a signal quality assessment model, and it will give us a reliability score. So let's first look at the feature selection part. This plot shows the top 20 features we choose as our input features. We use the sharp value. It has the largest absolute sharp value, which indicating it has the largest contribution to our model prediction. So we use this as the input features to our base model. And as you can see, we list the input for the base model is binary labels. Previously, we see we have -1, 1, and 0 labels. And at this point, we want to train our base model to focus more on classify label -1 and 1. So we only use dataset with label -1 and 1 and drop the dataset with label 0. But finally, we want our output has -1, 1, and also 0 because we won't trade all the time. So we add a conformal prediction part. The conformal prediction will help us to filtering out the low confidence -1 and 1 and replace it with 0. And then, so after the base model and conformal prediction, we will get output -1 and 1 and 0. So think of this. We would always have wrong predictions, but not all the wrong predictions are not acceptable. For example, if the wrong predictions is 0, then we won't trade based on that signal. So this won't lead to a false trade. But if the wrong prediction is -1 or 1, we would trade based on the signal. So this would lead to the false trade. So we add the second filtering model. This helps us to reduce the wrong prediction, which will lead to false trade. Our idea is to design another labels so that we can build another classification model. And I can give you an intuition of this model and what is the outcome. So if the base model tells us at this time point, it should be the peak or valley. And the second model can tell us whether it is a peak or valley. If it says it is not that peak or valley, then we can cancel the base model prediction. We won't trade based on the base model prediction at that time. Okay, after we get our final prediction, signal trading prediction, then we want to know the signal is right or wrong. We want to know how reliable the signal is. So we build a meta label model. The meta label model predicts whether a trading signal produced by the previous stage is likely to be correct. And we design the meta label model label as 1 and 0. 1 indicates previous prediction is right, and 0 indicates previous prediction is wrong. So that after the model, what we can get is prediction 1 and 0, which can indicate right or wrong. And then also a probability score, which can tell us how reliable the signal is. With this model, what we can do is to first, we can reject the trade if the probability score is low. And also we can use the probability score as our position size if we want to open a position based on that trading signal. After the multi-stage model, we can get the probability score and also the trading signal. So we use this tool to do the backtest. Our backtest first will evaluate whether the current position has hit the stop loss or take profit threshold. And we use a trailing stop loss. And then execute trading signal. The trades are executed only when the confidence level exit a predefined threshold. As you can see in the plot, there's multi-label probability and signals. The first signal, -1, it has a probability score 0.67. So I think we probably can trade based on this signal. But the next three trading signal with only reliability score less than 0.4. So probably we won't trade this trading signal. And when we open a position, we will make the position size equal to the probability score. And every time a position is opened or closed, we track the performance, and finally we'll get an equity curve. Let me show you the final result we get. Here is the equity curve of our strategy and compared to the buy and hold strategy. The orange one is the buy and hold strategy. So I would say sometimes our strategy is more stable, and this is what we are looking for. For example, it's this year, April, when the tariff comes, the buy and hold strategy will face a large drawdown, but our strategy equity curve is a straight line here, which indicates we haven't held any position at that time point. I think this is actually exciting, but we won't know if in the future the market face another large drop, what our strategy would do. But I think we are trying to add more conditions and filtering model, as you say before, to avoid that conditions to happen, or to avoid that situation to happen. In the future, what we are going to do is to improve the model performance by try more different machine learning models and more features and conditions, try different conditions. In the long term, I think we will try advanced trading system like use long-term signals, short-term signals, and how to combine those, and also more reasonable position sizing algorithm.